agree. Yeah, sure.
Good morning, everyone. I think we've got a few more people straggling in from the coffee break, but we'll get started. We've got a lot that we'd like to cover. Good morning, everyone. I'm here at the Abbey and also those who've joined online. My name is Sam Mendelson. I'm Financial Inclusion Specialist at EMFP, and I'm part of the team that designs and organizes the annual European Microfinance Award. I'm also the lead author of the annual award publication, and it's in that capacity that I'm honored to open this plenary session on inclusive finance for food security and nutrition. This is the 14th edition of the EMA. The award was launched in 2005 by the Luxembourg Ministry of Foreign and European Affairs and is jointly organized by the Ministry, EMFP, and the Inclusive Finance Network Luxembourg, with support from the European Investment Bank. The award serves two parallel goals. It's rewarding excellence and collecting and disseminating the most relevant practices for replication by others. It has grown in influence and prestige over the last 18 years and was once described by the late Ulanbek Tomichikov of Companion as the Nobel Prize of Microfinance. This year's topic, as you will surely know by now, has been on inclusive finance for food security and nutrition. As you'll hear in this plenary, tonight at the ceremony at the EIB and the various breakout sessions at the conference that today kicks off, this is a challenge that after decades of progress has stalled and even reversed. It's an extremely complex problem and takes the proverbial village to solve. But there is a vital role for the financial inclusion sector to play, serving as it does the very same households and businesses that are vulnerable to the challenges of food security and of ensuring access to affordable, reliable, quality food through sustainable food systems. And before handing off to Micah and the panelists, I'm here to announce the launch of the annual award publication. There are hard copies at the back, and there's the cover there. It can also be accessed via the link on the EMFP website for those who prepare a PDF, and we'll put it in the online chat for this session. The paper includes a landscape of the topic with significant contribution from Micah here. It introduces and is structured around the FAO's 4 dimensions of food security: availability, access, utilization, and stability, of which you'll hear more over the next couple of days. It also, as every year, profiles the 10 semi-finalists of the award process that started with a field of 41, and among the 10, the 3 finalists that you're going to meet and hear from tonight at the ceremony. Food security is a continuum, but so too is the role of financial inclusion organizations, and the applicants of the award reveal a spectrum or continuum of different approaches across the value chain, from food producers, arable and livestock farmers, themselves dependent on inputs, to processing, packaging, transport, distribution, all the way to the end consumer. And the paper finishes with what we call the factors for success, summarizes some of the best practice that the EMA team over the year and the experts that have supported us identify as gaps where financial inclusion organizations can do more and where best practice is emerging. We hope it gives a sense of the scale of the challenge and the role that the sector can play, but cannot play alone, with some real examples. There is also at the back something called the Members Spotlight. Over the course of the award process, we ask our members a series of questions for the work they're doing on the topic of that year's award, and we condense them together in a paper called The Spotlight, and I commend it to you. There's some great stuff in there from our members. Thank you for everyone who contributed to the award publication. You know who you are. And it gives me great pleasure to hand over to Micah and the other panelists to kick off this plenary session on inclusive finance for food security and nutrition. Thank you.
Thanks, Sam. Good morning and welcome to everyone. We have a stellar lineup of speakers today. And before I delve into a discussion with them and then with you in the audience about financial inclusion for food security, I thought it would be worthwhile to just give you a quick primer on food security and nutrition. Why? Because I think that a lot of us here working in the financial sector haven't had occasion to think much about hunger and its various dimensions. And I think even fewer of us here in this room today have experienced food insecurity ourselves. So, what is food security and nutrition? The FAO defines food security as when all people at all times have physical and economic access to sufficient, safe, and nutritious food to meet their dietary needs and food preferences for an active and healthy life. But let's break down that dense definition a little bit. Experts also talk about, and you've just heard from Sam, the 4 dimensions of food security. And I'd like to walk through those 4 dimensions briefly. And to illustrate, I'll talk about a fictitious young Senegalese mother whom I'm going to call Salimata. So here you see the circle of food security with food security in the middle and the 4 dimensions or pillars of food security surrounding those. The first dimension in light green is availability. Availability means that food exists locally in sufficient quantity and quality. And in Salimata's rural village in central Senegal, her family and a lot of other households farm millet and onions, and they raise chickens. And there's a little village shop where they can go to get rice and dried fish. On the other hand, fresh fruits and vegetables and meats are not readily available in the village. They need to go out of the village to a town to get those, and they're expensive to purchase. For several months each year, though, Salimata's family runs low on millet and also on cash to purchase rice or other foods. So the family typically reduces their food intake to about 1 meal a day for adults and 2 small meals a day for children. So in Salimata's village, the dimension of availability is not fulfilled. The second dimension is access, which means that people can purchase or produce appropriate and adequate food. Salimata and her family, as I said, produce millet, and they can purchase rice in the village shop during part of the year. And although in the town, they could purchase some other foods, it's very expensive. And Salimata can only do that on really rare special occasions. So her access to food is constrained. And access is the dimension that's most closely linked to livelihoods. So it can also mean, for example, the ability of smallholder farmers to get their goods to market for sale. And we can see in one of this year's European Microfinance Award finalists, Fortune Credit in Kenya, that tries to tackle this kind of issue in part by financing motorbikes for youth so that they can create small businesses transporting inputs to farms and then farm produce back to markets in urban areas for sale. The third dimension is utilization in light blue. This refers to people's ability to select, handle, and absorb the food that they eat so that it's nutritious and safe. Millet broth is typically what people eat in Salimata's village. So people aren't really talking much about nutritional balance and diversity in their diet. Goiters are common in the village, and this is because of a lack of iodide, which is one nutrient, but also many other families have malnourished children who are lacking other vitamins and minerals in their diet. Diarrhea is common because water and foods are often contaminated by poor storage or pesticides. And some children even just stop growing and become stunted because their bodies can't absorb the nutrients of the food that they are able to eat. So utilization is not at a healthy level in Salimata's community because of nutrition-related knowledge, behavior, and awareness, as well as the 2 other dimensions of availability and access. The final dimension is stability. And this means that the foregoing dimensions are all sustainable over the foreseeable future, with low risk of rupture due to environmental, political, or economic events. Unfortunately, in Salimata's village, the weather has been more and more unpredictable. And in the past 5 years, the family has lost their entire millet crop due to first, no rains coming at all, and then another year rains coming for 3 weeks straight and flooding the fields hopelessly. So stability is not assured in Salimata's village. And we see stability threatened today in many countries by socio-political conflict, internal displacement, and geopolitical conflict that's leading to increasingly inaccessible inputs and some staples. One of our award finalists this year, the microfinance institution YICRI in Burkina Faso, is contending with a clientele that faces all of these threats that I just mentioned at once. So as you can see from this circle, the 4 dimensions of food security and nutrition are interrelated, and they really are like pillars in that they're interdependent. If any one of them is weak, all of the others are affected, and food security is then threatened. But it's also important to recognize that food insecurity occurs on a spectrum. And Sam alluded to this earlier, but I'd like to just show you an image that illustrates this. Hunger is not black and white, yes or no, binary. In some dire situations, we might have people facing actual starvation, which is on the left in red there on the spectrum. While in others, like Salimata's community, people may grapple with seasonal or chronic hunger, which you see in yellow, left of middle. Still others can experience what we refer to as hidden hunger. And hidden hunger can mean several things. Perhaps they eat regularly and healthfully, but just not enough. So there isn't enough calorie intake to fulfill their nutritional needs. And that's the inadequate intake. Or maybe people feel like they eat enough, but they have diminished productivity and health because of a lack of nutritional balance. Paradoxically, obesity also falls in this category of hidden hunger, and obesity can lead to numerous chronic health problems. And you see that there under obesogenic intake. Today, there's a growing problem of what we refer to as the dual burden of chronic hunger on the one hand and obesity on the other, because people have replaced traditional foods with lower nutrition, highly processed foods that are often cheaper and faster. Another of our finalists this year, Fundación Génesis in Guatemala, is serving a population that has one of the highest rates of childhood malnutrition in the world. And at the same time, they have a 58% obesity rate in urban areas. So food security is not just about going hungry. It's a multidimensional phenomenon that requires a multidimensional response. And it's integrally related to the cycle of poverty. So today we have 4 experts gathered. One is online, and we're going to hear from them. They're going to be contributing their perspectives and experience on inclusive finance to address issues of food security and nutrition. And I'd like to introduce them. So first, if we could pull Carl up so we can say hello to him. Hi, Carl.
Hello.
This is Carl Hiralal, joining us from Canada. Carl is chair of the Insurance and Pensions Advisory Board of the Toronto Centre. He develops regulatory training programs that address not only prudential supervision, but also promote sound and inclusive financial systems and foster sustainable economic growth, reduce poverty, and benefit women and children. So welcome, Carl. We'll come back to you soon. We also have here with us in person, Cheryl Harrison on the far right. And Cheryl is Deputy Director of World Food Program's Cash-Based Transfers Division. During her 2 decades at World Food Program, she served as Deputy Country Director in Uganda and Sudan, overseeing emergency cash transfer activities, commodity swaps, and mobile money initiatives. And she was head of innovations in Kenya when WFP won an award for introducing biometric identity checks for people receiving cash transfers. And she started out at WFP as gender service advisor. Welcome, Cheryl. We also have Lidvin Schiltz of Rabo Foundation in the blue jacket here on the left on the stage. Lidvin is managing director of Rabo Foundation. And during her 30 years of banking experience, she's worked at many different commercial and development banks, including ING, Rabobank, FMO, and EIB. And in developing countries, Rabo Foundation is focusing on supporting smallholder farmers, mostly working through local financial partners, and not only contributing to the availability of food, but also addressing the broader and increasingly serious challenges in the food system. And last but not least, in the center here on the podium, we have Benoit de Wagener of Homundi, formerly SOS FAN. And Benoit is General Secretary of Homundi. He's previously worked with Oxfam in the Sahel, as well as other countries in the Middle East and Africa and beyond. And he's worked closely with farmers and women's organizations, youth, and others to address social and human rights challenges. Today, he works with the Homundi team and their partner organizations and allies to help speed the transition to more sustainable, fair, and resilient food systems. I'd also like to note that unfortunately, we were not able to have Farad Zulfikar of the First Microfinance Bank of Syria join us today. Due to the security situation in his region, he couldn't fly, and even communications have been very disrupted. So it wasn't reliable to have him join us from afar today. So unfortunately, we won't have his inputs, but we'll be sharing examples from the field amongst ourselves. So I'm going to organize this little chat with our speakers around questions of why, what, and how of financial inclusion for food security and nutrition. And I'd like to start with you, Cheryl, and ask you to kind of set this stage for us. Because this issue of food security and nutrition, we're hearing more and more about today. And I think maybe some people had the impression that we had improved things. And it seems like this is an urgent issue. Can you tell us about why this has become such a critical concern today?
Yeah, okay, thanks, Micah. And I really liked the way that you described hunger, essentially, and food insecurity, and you brought the technical right down into the, you know, the actual day-to-day experience of it. And if I were to summarize what hunger is really like, food insecurity is really like, I would say it's parents who can't find enough food to be able to feed their children properly every day, basically looking for food. It's children who are too hungry to sleep well at night. And so they're also listless and unable to concentrate when they're in school because they're too hungry. And of course, when families experience this, when communities experience this, it's almost always the women and the girls that eat last and eat the least. It's also usually the girls that get pulled out of school first as I guess a coping strategy, because it's you know, it costs to send your children to school. So the impact of hunger on women and girls is particularly extreme. And yeah, the world was making a lot of progress, Micah, until COVID. Things took a very bad turn. And then of course the Ukraine war, and subsequent to that, we've just seen the number of people who are in that yellow and red zone on your chart go up a lot. So right now there's about 1 in 10 people globally who don't really know where their next meal is going to come from. There's also 350 million people who are in that red and yellow zone that were on your chart. So those are people who are in need of immediate food assistance. You break that down a little bit, there's 150 million more women that didn't have enough to eat last year than men, 150 more. So it's not inside even a household. There's not sort of equality in how hunger affects people. 60 million children are malnutritioned. We talk about wasting. This is one technical term that I do use because I like the way that it describes what actually is happening to a child. That's when a child gets really skinny because they haven't had enough to eat for a prolonged period of time. So 60 million children are right now wasted, and it's like a huge waste of their lives, frankly, because they're not growing physically properly, and their brains aren't developing properly either. So you can see this horrible connection between poverty and hunger and food insecurity, because you just lose whole generations essentially of people who are productive. Also during COVID, 47 million more women were pushed into extreme poverty. So this was in 1 year, 47 million more women pushed into extreme poverty. We can talk also about conflict and climate displacing people. So people having to leave their homes. Right now, there's it's estimated 117 million people forcibly displaced because of conflict and climate. So those are people who are on the move, basically trying to find a safe place to be. There's also the World Bank estimated 742 million women that don't have access to formal financial services. So they don't have a bank account or a mobile money wallet. And this is the link we're going to be making, I think, in this panel today. So 742 million, that's a lot. If that were a country, that would be the third largest country in the world. So that's a lot of women who can't control their own resources because they don't have a place to save, to put the money to keep it safe, to be able to use it when they need it. So all of this is to say, this slows economies. Yeah, it makes poverty more and more intractable. In fact, poverty is on the rise for the first time in 20 years. And it causes like indescribable suffering at the individual level as well. So that's where we're at right now in the world. Also, humanitarian resources are shrinking like a lot. So we have less, for example, in WFP, but all humanitarian organizations have a lot less money to be able to help people, but it's not really something humanitarian sector can solve in any case. You know, humanitarian work is really just a band-aid. We're really just trying to, you know, keep people alive in these situations. It's really something that we all need to solve together.
Yeah, thank you. So those are some stunning statistics. And so I think we get a sense of the enormity of this problem, but there are a lot of problems to address, and financial service providers have a lot on their plate also. And didn't we just as a sector go through a process of explaining to the development industry that microfinance can't be a panacea? So I'm going to kind of play devil's advocate here and saying, what does the financial service industry sector have to do with this, and what's the role that they can play? And that's where I'd like to shift to our next question, and maybe start at the macro level and go to Carl. So I'd like to have Carl tell us, if you would, among financial system regulatory bodies and the financial system and supervisors, does food security, are you seeing food security rise to the level of being a priority there? And why? Is Carl available?
Yes. Can you hear me?
Yes, we can. Thanks.
Well, thank you. And I appreciate the opportunity to share my views on food security. Food security is more relevant today to financial supervisors than previously was first apparent. At a macro level, what we are seeing is financial service providers, boards of directors of these organizations, policymakers, and financial service supervisors alike are recognizing increasingly that financial stability is impacted by non-financial risk. Traditionally, financial services supervisors focused on financial risk, but today they are seeing that financial stability, which is their core mandate, is impacted by non-financial risks. These non-financial risks include climate change, financial inclusion, gender equality, and now food security. So to illustrate the point, food security is generally impacted, or food production in general, is generally impacted by the vagaries of weather patterns and climate change resulting in floods, heat, and drought are exacerbating this risk. And so this is the connection that supervisors are making with financial stability, because climate change is now recognized as having a negative impact on food production, but it's also more so in the emerging markets and developing economies, where there are many smallholder farmers, and many of them are women. In some jurisdictions, almost 40% of smallholder farmers are women. So this in turn impacts financial inclusion. And therefore, what we are seeing as trainers of financial supervisors is that climate change is having a retrograde step on financial inclusion. And by extension, it's having a retrograde step on food security. So what has become clear is that in the effort to address climate-related financial risk and financial inclusion, there are important interdependencies, and this was mentioned earlier by one of the speakers. There are important interdependencies with food security. What is required and what financial services supervisors are focusing on at the moment is a holistic approach to the solution to these challenges. Fortunately, financial services supervisors are trained to focus on sustainability and resilience of the financial system as a whole. And the skill set is important as they address food security. So in addressing financial inclusion, gender equality, and food security is in many ways a microcosm of regulators' wider financial stability mandate. And that link is now being made more and more so. So in this context, financial services supervisors are well qualified to play an important role in ensuring that financial service providers, such as the insurance companies and the banks, develop and deliver products and services that are structured to promote resilient and sustainable food production. And of course, we all know that the United Nations Sustainable Development Goals #2 applies to food security. And this is one of the connections that brings it home to financial services supervisors. So financial services supervisors acknowledge that solutions for climate-related financial risk, financial inclusion, and gender equality, and by extension, food security, are critical to the effective fulfillment of their core mandate, which is prudential supervision. In other words, you cannot solve one without the other. This is, in effect, a reinforcing mechanism which augurs well for the promotion of concrete measures to promote food security. We at the Toronto Centre, as trainers, incorporate these interconnections in our programming. Almost 20% of all the training we do now incorporate food security. This approach is embraced and widely accepted, I have to say, and pleasantly so, by supervisors globally. In other words, this is a win-win situation. We see practical application of measures to promote food resilience to food security in the sub-Saharan African region, South America, Asia, and India. We are seeing policymakers in these jurisdictions are now seized of the need to address food security by changing insurance laws to promote and permit products that help farmers with needed agriculture production, in particular, parametric insurance, which I will discuss later. We are also seeing that policymakers are addressing financial literacy as part of their responsibilities to promote financial inclusion. And you cannot address financial inclusion today without addressing food security. So those are my opening comments on this.
Great. Thank you very much, Carl. It's helpful to understand how at the macro level, supervisors are starting to see all of the connections between food security, gender, climate change, and that this all needs to be addressed holistically. So I'd like to, in continuing on this question of why the financial sector should get engaged, I'd like to take it down now from the macro a little more to the grassroots level and turn to you, Benoit. Humundi has been working in this arena since inception, and I know that you have a lot of examples to share. So I'd like to hear about those. But before that, this is kind of a two-part question. Maybe we just talked about the financial system and we've thrown around a little bit this term food system. Could you just tell us a little bit about food systems and what we mean when we're talking about that?
Yeah, thank you, Mika, and thank you also to Cheryl for having drafted a good picture, sadly a good one, about food security. So Humundi has been working on food security, nutrition and hunger since 60 years. And we have used those frameworks of food security and nutrition, the one you mentioned. But at this stage and with partners around the world, we're working with, of course, some inclusive finance institutions, but also some farmer organization and other social movements. What we have seen today is that if you don't broaden the perspective, not only the 4 dimensions of food security, but also thinking in terms of food system, you don't really tackle the root causes of hunger. Because of course there is the war, climate change or climate crisis, but there is more than that. We have a broken food system today. Last week, the FAO issued a report on the hidden cost of food system. And it's a low evaluation because they take into account certain aspects, so they will take into account environmental costs, some of the health costs, but not all of them. Very low evaluation of the impact of low nutrition to children, for example. It's not included. But they assess that, they estimate that the total hidden cost of the food system today, it's around $13 billion a year, which is 10% of the annual GDP of the world. So it means our food system is broken because it fails to deliver and to ensure the right to food to everyone. But it's also failing to meet other challenges like climate change, like biodiversity losses. So we have a broken food system right now. So what is food system? I have taken a definition from a French university. There is more, there is some of the FAO, of course. So food system, in a classical definition, is a multi-stakeholder networks, or are multi-stakeholder networks, which link distant or local producers, processors, distributors, and consumers. When we talk about food system, we refer to human activities related to food, but also related to health. And beyond those needs, food system have a huge socioeconomic, cultural dimension. So food system and their environment, so food system and climate and biodiversity interacts deeply. And they could be, and this is maybe to answer the question to the why, it could be very positive. We could have very positive interaction between food system and environmental issues. But what we see today is that mostly the interaction between, on the spiral of interaction between food system and environmental issues is negative. So for us, for Humundi, for our partners, looking at that, it's broadening the perspective is absolutely essential. It's something we need to do. We need to do it because if not, we won't be able to tackle the root causes of hunger. But also, if we don't do it, we are missing something. Food system, it's a wonderful leverage to tackle other issues on which I think inclusive finance is also working.
Great, thank you. So tell us then, taking this food system understanding that it's kind of the whole value chain from beginning all the way to the consumer and all of the different aspects of that system and how they're interrelated and work together. Tell us what you're seeing at Humundi in terms of financial service providers engaging in the food system. How are they doing so? And is there a business case for that? Is there something that makes it worthwhile and potentially profitable or at least sustainable for them to do that?
So of course, it's a difficult question because there is such a complexity of context, but maybe just to say that thinking in terms of food system has a huge advantage because it's not only the actors that are active in the value chain, it's all the actors that are involved. So it means that the financial service providers are part of the system. you are not on the sideline. You are part of it. So it's also like highlighting the idea that you have a lot of power to change the stuff about food systems, also about food security and nutrition. At Umundi, we don't see our partners working in inclusive finance as sideliners just joining for an issue or another. They are part of the whole system. So maybe to mention two very important principles for us, what we have learned from our experience and the experience of the partners is that, first of all, we need to build multi-stakeholder approaches because we are in systems, so we need to work, and inclusive finance actors need to work with other actors of the food system, all of them as much as possible, with as much as possible a big diversity into it. So build teams to challenge the food system. The second one will be that you need to put farmers at the center. I mean, I've listened to the panel this morning about gender. What we see is that we need to put women at the center of the services. If you want to have services that will meet the need of the woman, you need to put them at the table. The same for farmers, the same for smallholders, because maybe two very important things that you will need to know. First one is that the first people suffering from hunger are farmers, are smallholder farmers. They are the first ones suffering from hunger. So if you want to be serious about food security, invite them at the table. The second one is that if you look at globally, but even more in sub-Saharan Africa and Asia, the first food producers are smallholder farmers and women. They are the first one providing food to everyone. Mm-hmm. So if you want to speak about food security and nutrition, work with them, and I will talk to it later. Talk about that later. We need to find a way to include them in dialogue about the financial services that you will be providing.
Great. Yes, of course. And we'll come back in a little while to hear some more specific examples. Thank you very much, Benoit. I'd like to turn to you now, Lidvine, and kind of press this a little bit more, this question about the business case for financial service providers to address food security and nutrition. And I'm particularly interested too, since you've worked in commercial banking, to hear your perspective on this business case for tackling food security as a financial service provider.
Yeah, thank you. Well, first of all, thank you very much for being part of this interesting discussion and so challenging topic nowadays. First of all, I very much sympathize what has been said by Carl and you already in this respect. I think we have to look at the whole food chain or system, but every part in the food chain, every player in the food chain should have access to finance. That's very important. There it starts. And also you were talking about smallholder farmers, and that's also where we focus on. But smallholder farmers have such an essential role in this total, but are mostly quite difficult to finance. So financial service providers want to have a viable business case. And we believe that we can, if we make a sustainable food chain, then we can also make a viable business case. And that's the reason that we as foundation, we support with knowledge, but with finance. We support, for instance, productivity for farms, smallholder farmer productivity, by helping them to have better soil conditions, to transfer to agroforestry or to biodiversity, regenerative farming. And the result is that you get better soil, better land use, but also you are more client resilient, which is key to this, also to the stability, as we heard before. But also to the yield, and then we are involved in supporting the storage and the transport, where we try to reduce the food waste. So we support the quality and the quantity of food, and we believe very important the use of technology, data, and innovation in this whole respect. And there we have a very nice example, and I would like to mention here. It's for instance, it's EcoFresh, and this is a company in Kenya, and they provide mobile storage units and cold storage, and it's being the containers, and they're being cooled by solar system. You can put them everywhere, so they put them next to the farmers. Farmers bring their produce there. It stays longer. Some fruits and vegetables up till 40% less food waste, which is amazing. And by collecting it, you also get a better access to the market, where the farmers get a better income, better margin on their produce and more quality, more quantity. And this is also something which is scalable. And we think if it's scalable, it might be that this is a viable business case which can be taken over by other financial institutions as well.
Right. So
Yeah.
business opportunities in this
Yes.
space as well.
Indeed.
Yeah,
Yes,
excellent.
indeed. Yeah.
Well, so while we're talking about business opportunities and business case, I have to ask a pesky question of you, Cheryl, because you're representing World Food Program, humanitarian aid organization up here on the stage while we're talking about financial services. Can you tell me what's the connection? What's the role?
Yeah, so I get that question a lot, as you can imagine. What does the World Food Program have to do with, with
With financial
finance
services?
and so I'll tell you just a little story. When I started in WFP 20 years ago, mainly we were giving people food in bags, sacks of grain and pulses and oil, and a balanced meal. Then about 15 years ago, we started experimenting with using cash transfers, giving people money instead of food. And very quickly saw that this was possible, even with the types of people that we're working with who are very hard to reach, that it was possible, that it gave people a kind of choice and flexibility to be able to decide what they actually needed in any given moment. So, when you give somebody food, if they actually right in that moment need medicine or a bed net for their child, both of which are very important for nutrition as well. Yeah, they have to sell a bit of the food then, right, to make some money, and usually they sell it at throwaway prices. So very, very soon WFP saw that in almost every situation, giving people money, sending people money is the best form of assistance. It's also the least expensive form of assistance. So, for example, when we, on average, globally, when we send people money, 81 cents of every donor dollar makes it actually to their pockets. And that doesn't sound like enough. I agree with you. I wish it were higher, but these are really difficult locations. Like, we're sending people money in Yemen and Somalia, and these are hard to reach populations. So a lot goes into getting the money to them. When we're assisting those same people with in-kind food, only 53 cents of the value of that $1 gets to them. So in times when humanitarian needs are growing and humanitarian resources are shrinking, cash makes a lot of sense on that front as well. We also now know there's like more than a decade of evidence about humanitarian cash transfers and social safety nets that shows that you can get a lot more impact. And here's the tie-in, frankly, because if you're sending people money and they're using the money to buy what they need urgently, that's great. It's good for local economies. The money multiplies when it hits the local, and it hits the local economy really fast because people are spending it right away because they really have a high need. But if you go one step further and target women with that money, so we give money to households, and usually if you ask for the head of household, 9 times out of 10, it's going to be a man that steps forward. But if you have conversations and really direct that money instead to women, you get a lot more impact. There's so much evidence, IMF, World Bank, it's just like overwhelming evidence that when you put money directly into women's hands, that economies grow, women spend their money very wisely, they keep their daughters in school. I remember talking to Aisha, a woman that was in Niger that we're assisting with cash transfers. And I asked her how she used her money. And she said, well, I should probably tell you that I use it to buy food, right? And I said, why don't you just tell me how you actually use it? And she said, I keep my daughters in school. I've got 9 children, and until I received these cash transfers, it was only the sons that were going to school. And that generational impact of keeping girls in school is huge. In Niger, 76% of girls are married below the age of 18. 76%. It's like 28% below the age of 15. So you can just imagine the impact on nutrition of those girls having babies before their bodies and their minds are ready. It's an enormous impact on food security and nutrition. So she's doing more by keeping her daughter in school than by just using it immediately to buy food. Now, here's the rub. If we send money to women into their own digital accounts where they can control the money and they can receive money from other sources, remittances from their family members working abroad, or employment, employers, if they manage to make it into the workforce, or a safety net from the government, they have a way to control their money. And it's that very empowering moment when women actually have money that they can actually control themselves, where we get the really big impact. So it costs a lot less and you get a lot bigger impact. So this is why last year, I think we did $3.3 billion in cash transfers to about 50 million people. Yeah.
Wow. So Cheryl, I think that this story feeds directly into the next question that I wanted to ask all of you. So I'm going to come right back to you here for some more examples. But so we've heard how important food security and nutrition is today. And we've also heard what the connection is to financial services. But the thing is, many financial service providers don't have the kind of expertise that we're sharing here about food systems, about how to address food security and nutrition, and it can be expensive to provide those sorts of services. So I'd like to turn our attention to how the sector is engaging and can engage in addressing food security, and particularly maybe looking at examples of partnership and technology and ways to make this a sustainable endeavor. So maybe you can tell us a little bit more about cash transfers and then any linkage that you're seeing to financial service providers, because you've just shared so beautifully all of the ways in which that connects almost directly.
Yeah, exactly. And it's really now the devil's in the how to do it. So the evidence is clear. Sending money to women gets really good impact for really quite small amount of money. But how to do that is really tricky, because most of the women that we're working with would fall into that 742 million women who don't have access to formal financial services. Many don't have an ID, a national ID, or any kind of legal identity document that they can use to open an account. So that becomes challenge number one, is to either get the regulators engaged in flexible KYC, or to help get the women to apply for and get IDs. That's a really, really big challenge. Products and services are just not tailored to or made for women, especially women in these types of situations. Mobile money is really super. It's fantastic. It's not everywhere, and there's other issues, with using mobile money that we see. Consumer protection's not high enough. Women often don't have the information they need to be able to choose which product or service is best for them, or the confidence really to use the products and the services the way in the best way possible. So it's a bit intimidating sometimes to do this. So we need a lot of partners to step in, because our niche is to get money to people really quickly in really hard to reach places who need money a lot, and they need it now. But our expertise is not designing products and services. We need partners to come in and do that. It's not to be able to provide information and help women to become more confident in their use of financial products and services. Again, that's something that we really need partners to step up and to do.
Yeah. Well, and we can kind of see how cash transfers can be a form of gateway to financial service providers to access this population that is just getting their feet on the ground and maybe could eventually make use of financial services provided through mobile money and other digital mechanisms. Thanks. I'd like to go back to you, Carl, because you touched on earlier some work that the Toronto Centre is doing in insurance. And it addresses not only the availability of food, but also importantly, the stability and sustainability of the food system. So could you please share with us a bit how crop and weather insurance contribute to food security and nutrition? And also, this is an example of linkages that can be made between insurance programs and financial service providers.
Yes, thank you. It's important to recognize that the Toronto Centre is not a sector-specific trainer. We train regulators in integrated supervisory jurisdictions. In other words, we train regulators who have responsibilities for insurance, banking, pensions, and also credit unions. And so we take a holistic view of this because we have that unique position where we are training institution integrated regulators. But more importantly, financial institutions have an interest or obligation to provide services and products that are needed in the societies in which they operate. In other words, where a protection gap exists, and the protection gap does exist, and protection gap became more and more important as an issue during COVID, but where a protection gap exists, it should be addressed. And currently, there is a protection gap as far as agriculture insurance is concerned, but more so in the emerging market and developing economies. By contrast, in developed economies or in developed countries, crop insurance is much more widely used, and in many cases subsidized by governments. And it's not just subsidizing the farmers directly through fertilizers and that kind of thing. In the developed countries, there is revenue or price guarantees. So when the farmers sell their products, the prices are guaranteed. And that is widely used in the developed markets. But in the emerging markets and the developing economies, parametric insurance is the most appropriate form of protection that financial services providers can provide, particularly to smallholder farmers. And this is where we are seeing that a fair amount of progress is being made. But we need to look at food security in a larger context. Parametric insurance not only provides financial support to farmers, but more importantly, it facilitates access to financial institutions such as microfinance companies. And this in turn has a cascading positive impact on making borrowing, investing, and savings services available to these smallholder farmers. In other words, what we saw during the COVID, many jurisdictions provided support, cash support to the population in general, and they did that through a banking organization, and these banks were able to open a bank account for many of the poorer people in their country. But what we found was having access to a bank account does nothing for the individual. It only benefits the financial institution. And so what we wanted is for the financial institution to take that to the next step and get the people who got access to these bank accounts to engage in borrowing, investing, and saving activities. And that is the angle that we are pushing, because we see this as promoting gender equality, which and as we know, in the emerging markets, there are many smallholder farmers, almost 40% in some jurisdictions are women. So when parametric insurance is used as collateral to access bank loans, and this is the connection. So the parametric insurance provided by the insurance company, the farmer now takes this parametric insurance to the microfinance organization and is able to access a bank loan. What we have found and what we are seeing is that this access to the microfinance organization is now emboldening farmers to take a greater risk by purchasing more expensive, higher yielding grain, but also more efficient grades of fertilizers. So what we're actually seeing is that access to microfinance institutions are permitting a smoothing of consumption patterns for farmers who are now can use the loans to feed themselves and their families all year. In other words, what is happening is we are sort of addressing the situation where farmers are able to eat and feed themselves and the family as a seasonal issue. Now we are smoothing it, and they're able to access the microfinance institution to get loans, so they're able to eat all year, and that is a significant improvement. We are seeing the use of parametric insurance greater and greater being used in sub-Saharan Africa, South America, and India. The other thing that we are seeing, and we are pushing as trainers of financial services supervisors, is that digital transformation, which got a boost during COVID, has facilitated the use of parametric insurance. What it does is it electronically, we eliminate the person-to-person or the middleman, so to speak. And so parametric digital transformation is allowing the easier issuance of the policy, the administration of the policy, and the payment of claims. Is all done electronically. And this is making it easier and cheaper and more efficient. And so parametric insurance, the price is now coming down. In addition to that, we see supervisors as having an important role in influencing policymakers to promote parametric insurance. And so what we are saying, and as I alluded to earlier, we need the legislation to change to allow parametric insurance to be sold. Parametric insurance in many jurisdictions does not meet the strict definition of insurance. We also want the regulators to influence the policymakers to set up weather stations, so data can be gathered to assist the farmers, who in turn can utilize this for reinsurance purposes, because the reinsurance companies need the weather data. And so that is the other connection we are seeing with the financial services provider. A further point is what we are seeing is that supervisors have a role to play in encouraging and facilitating the bundling of insurance products with other financial services products, because as this encourages their use by farmers, this could further aid in resilience and sustainability of food production. So for example, in Thailand, we are seeing that if a farmer takes a loan at the same time as he buys insurance, the bank actually subsidizes the insurance premium. And that is the approach we are taking to push the linkage between the parametric insurance and microfinance. I'll just say
because it's a win-win, right?
Yes.
We've got an example here of a real win, not only for the farmers who have their investments de-risked, and for the MFIs who have their investments in the farms de-risked, but also this emboldening, as you say, of the farmers who are able to go bigger, to invest further, to try maybe some riskier techniques that can be beneficial and also lead to more business for the MFIs. So thank you very much for sharing that. And I'd like to move on in the interest of time to talk a little bit about some technology examples. And I'll turn to you, Lidvin, to talk about, we've just heard some examples of partnership, but I know that there is some work that Rabo has been doing in India that has integrated technology into partnership. And I'd like to hear that example.
Yeah, that's actually a very nice. I think the agtech companies are also playing a big role in making food available and stability. And we have an interesting partner there, which is the Hat. It's an Indian company. It's makes use of AI based technology, quite advanced and always updated. And what it does, it provides information, services, all kind of services. It's a one-stop shop to farmers, deep rural smallholder farmers. And they do it in various ways. They do it by way of digitally, and with apps, for instance, but also physically. But it's very interesting. The app provides all kinds of information. It's like, what's the weather? What inputs do you need for your soil? When you need to harvest? What is the price on the market, etc. So the farmers can be really their self steering. And then they have the centers where they provide trainings and for farmers, give advice, but also sell inputs. Then they also collect the inputs, the produce of the farmers, and the farmers get instant payment at the moment of collection. And then furthermore, they store it, and when storing it again, you save a lot of food waste, etc. So it's a one-stop shop. What is really interesting, they now reach already over 1.8 million very small farmers throughout 120,000 communities in India, which is quite substantial. They have a lot of new ideas to integrate in their platforms. So this really adds to yield, to quality, quantity, and availability.
Absolutely.
So it's really a great scalable example.
Yeah, absolutely. Excellent example. And we've seen a number of agritech platforms mentioned in the semi-finalists and finalists of the European Microfinance Award. And I think it's another opportunity that's there to build on, a business opportunity.
Absolutely. Yeah.
Great. I'm going to turn to you now again, Benoit, to ask you some tough questions about we've just heard a lot of examples, but what's actually working? Can you share a few more examples from the experience of Humundi, and then also tell us what is really working in terms of financial sector interventions to improve food security, and where are the gaps?
That's a
small
tough
question.
I will try to be mindful of the time. We'll keep some time for the Q&A. So
yes.
Maybe to start with something I have already mentioned, so the need for a multi-stakeholder approach and to put farmer at the center. Just mentioning one example in the northern part of Burkina Faso, so a very hard to reach region, where we work with cereal banks. They are organizing a network with the cooperatives, and the cooperatives lends money to the cereal banks to buy food in other area where there is surplus of production, where there is grains available. So that the cereal banks, of course, they will increase the access to food for their members. But we don't only do that. So we work with these cooperatives. The cereal banks are called the greniers de sécurité alimentaire. It's quite well known. And then we also work in the area where there is this surplus of production. And we are working with farm organizations to improve their production capacities. So, and there is also a third actor. We also work in the northern Burkina, so the area where there is the cereal banks. And we work with farmers through MFI. UPTEC is an MFI working in northern Burkina Faso, is supporting the agroecological production of potatoes for farmers, which increase their incomes and their access to food also. So we see that we work at different levels. Farmers are at the center, but we work with MFI and inclusive finance, which has an important role to play. So that's already two very important things. That's two learnings, and it works. I am sharing it because it works. It needs to include those actors, but it definitely works. So a second important one is what my colleagues call the risk and diversification. Because of course, working on food security and nutrition is maybe not the most, that will not be the sector where inclusive finance and financial actor will earn the most of their money. So you need to diversify the risks. And we have two examples. One in Ethiopia, where we have seen that some of the key MFI with a very strong social mission, working in rural areas, they are also opening branches in Addis Ababa to diversify and to make sure that they can offer accessible services to rural areas. And on the other side, in the RC, close to Kinshasa, we are working one MFI, Gilgal. And so they are working since a long time in Kinshasa with middle-income customers. So they are quite stable, but now they are going to hard-to-reach region to offer rural services, financial services to rural people. And it works because they are diversifying their risks. That's something very important. On the other side, what we know also is that if, as a financial service provider, you don't have a strong social mission, maybe you are not the one that will be willing to work on food security and nutrition, because it's a difficult topic. It's really needed, but it's a difficult one. So we need to acknowledge that it has to be, you need to be aware of what is it to invest in such an issue. And something that I wanted to say also is that we need to acknowledge the need for co-financing. So we are an NGO, we are working with grants, and it works to work together with financial institutions. And we need to be clear about the objectives that we have. And of course, we have different approaches, but working together can work. And I know there is a debate about guarantee funds, but what we have seen that sometimes in some specific context to help some microfinance institution to take risks, it can help. It can definitely help. I mean, one last thing I want to say is that because I said it's a complex issue, financial service provider cannot work alone. We need to be aware that what's at play. And I think what's at play is the huge challenge of deeply transforming our food system. And so we need to have conducive policies. And we need them. And I think you mentioned the importance of scaling up some things that we know that are working, and you can play a role in helping, supporting maybe some initiatives that are really transformative, because we need evidence. We need evidence to influence some, at political level, we need to influence some private sector also. So, and because money is scarce, in the way you frame your products, and we can speak about fertilizers, there is a huge choice there. Because with the war in Ukraine, we've seen that depending on chemical fertilizers coming from far away, actually it's a source of vulnerability for our food system, especially in some countries we are working in. And so investing in organic fertilizer, for example, that's a real choice that you can make. And it will make a difference, not only on food security and nutrition, but on also on the battlefield, I would say, of the transformation of food systems. So that's something you can be aware of. And so just to finish, so we need conducive policies. This means that we need national policies pushing for agroecology and fair and sustainable food systems. That's something we need. We need also national policies to help you, the financial sector, to support us. So it can be programs supporting MFI to invest in rural areas. And it can be anything you can tell, but we need policies to support that. Definitely. We need also development and finance institutions to support us. I mean, I'm coming from Belgium, maybe BIOS is in the room, I don't know. But what we have seen is that we need you to take more risks, in fact. So those are a bit what I will say also. And maybe just to finish, because it's something very important that I do believe, and it's not something that you will discuss, I think, here very often, but looking at trade policies, we need policies protecting local markets. And it's something that I think if some actors in the room were willing to defend this position with us and our local partners, it can make a difference also. Thank you.
Excellent. Thank you. Thank you very much for tackling that question. And you mentioned evidence and a commitment to social mission among financial service providers. And we also, I think, need to find easy and strategic, efficient ways to measure the progress that's being made, because we can't manage what we don't even measure. So, but I would like to turn to all of you who might have questions in the room. There's a microphone, I think, that's going to come around. And then also, if there are people online who have questions, please feel free to submit those, and we will field a couple of questions here. We'll just run a couple minutes over.
Thank you, Monica. Thank you, everybody. It's been a great, probably the best panel so far of the conference. Matteo Marinelli, I'm a freelance consultant. I've been in the industry for quite some time, which means I'm aging pretty badly. I've been on the debt side, on the equity side. I've run an institution in Myanmar serving smallholder farmers. I've built 4 greenfield institutions from scratch. I like what you guys said. I think it makes all sense. But I think there are a couple of reflections that I want to share. I think we've been finger pointing at FSPs, MFIs, AgTechs, the grassroots. All true. I think they have a major responsibilities to innovate, to talk to the customers, because they're right there. But I think let's not also forget to talk to the investors, to donors, to DFIs, to MIVs. I was on the debt side of microfinance, and I've never seen a financial covenant between a lender and an FSP about portfolio quality. Usually they tend to give you a portfolio quality covenant, meaning You borrow from us, make sure you pay back, or you have this wiggle room of space that you can maneuver before you breach the covenant. I've never seen a covenant like that saying, oh, by the way, feel free to go to 10% of par in case of food insecurities of your clients. I've never seen that. I don't know, maybe there are good MIVs right now in this room doing this, so I apologize to you in advance. But if that's not the case, that's just one example, Mika, of the relationship between FSPs and where the money comes from. I think we should also, I'll be brief, we should also talk more about regenerative agriculture in this space, about the 9 principles of natural farming. And then you guys talked about, oh, it's difficult to do ag finance. Yes, but we have done it. A lot of people are doing ag finance. And guess what? Where is the money coming from? I think we need to incentivize investors to give us more funds about ag finance, easier covenants, more money, and give us the chance to fail. Don't be afraid of burning your cash. And at the end of the day, I think Cheryl mentioned, I think we still have a huge funding gap. I think in some of the papers, we talk about $14 billion of additional funding needed per year.
Yeah.
That's not a lot compared to military spending.
Thanks, Matteo. I think there's a reaction from an audience member here.
Thank you for this, because I'm going to complement it and make it even more complex than
Okay.
that. My name is Hanadi. I work for Crédit Agricole Foundation. But before that, I was lucky to work on the humanitarian side and on the development side. And these people, when we talk about fragile populations, they literally lie in between. They're too rich for charity, they're too poor and risky for financial inclusion. So they're literally in between, and nobody is willing to look at this market and take more risks. But to take this a little bit, because my colleague mentioned all I wanted to mention on this point, the second point is we should not, when we talk about policies, when we talk about conducive policies, about what you mentioned on flexibility, let's not forget the governments of the North. It's not only the South, because the central bank in Kenya cannot breach the EMFP policies that are set, by the international bodies. And as long as these policies are not conducive, I spoke with Central Bank of Kenya. I worked with Central Bank of Sudan before the war. And when we reach a point where we say, okay, on the strategy for financial inclusion, let's include more vulnerable populations, no, stop. We cannot breach this.
Right.
And talking about MIVs and investors, also MIVs, investors in the North, their money comes from governments sometimes, and sometimes from private investors who also are very risk averse. They're too scared to take risks.
Right.
And
So
we can sit here for 3 hours and talk about this. As long as the North is not willing to be flexible, the South cannot be flexible enough.
Yeah.
And we cannot solve the problem.
There's a lot of power that exists amongst those investors and DFIs, and I would like to maybe have you rebound on that.
Yeah, actually, I cannot deny anything of what you said. And we encountered that, of course, as well. We are on the side of, we're the foundation. We're a foundation of a bank, so they put aside some money for these sort of things. But then we try to graduate our projects, our partners, etc. And then you come somewhere in a kind of field where you're looking for what type of investments can I knock on the door. So, and that's exactly the point. We see that there is a gap between what we do and a few other institutions. And then you go to microfinance. Sometimes it's that matches. But then, I mean, then there is a gap. And that's exactly the point. And I can't give you the answer because I don't think anyone can. But it's a matter of who wants to take the costs of it. But
Yeah.
it has a cost, that's clear.
Okay, 2 more. Thank you.
Yeah.
Yeah, so hopefully it's stimulating some thought in this room amongst those who are holding those purse strings. Could I have a couple other questions, please? Are there any online? No. Anyone else have questions? Yes.
Thank you. Actually, Michael Groot, I have two questions on more on the abstract level and trying to bring it back to here to the practitioners, because most of them are MFIs. Look, next session on African MFIs. I notice a lot in the last couple of decades coming here, it's all that MFIs have to do this, have to do that, have to do gender, food, customer relationship. Could they have to do everything? Whereas, you know, one question is then for Carl, perhaps later on, Mr. Hiralal, whether on, you know, and you said it, central bank, you were central banking. Then, I mean, a lot of things from supervisory boards are only limiting and progressing on risk. Again, now we hear the new part, risk, we see climate as a risk, we see this as a risk, not an opening to support, not something growing opportunities, more as a risk, so restricting the work of MFIs, financial institutions. So just wondering how they look at it. The other question is more, Mrs. Harrison, Chair. There's an enormous amount of microfinance financial institutions. So those are the ones in the field who have the outreach to these millions of women, which you said, which is the third country in the world. Supporting. And I wonder how you work with that in your cash transfer basis, because of course there is this issue of urgency, fast, that needs to be done now. So I assume you want the easiest one, the quickest one. So by example, Google Bank or something, you want to reach the world in once. But the whole ground layer are 44,000 savings and credit co-ops. And looking for a new mechanism, also from World Food Programme, to be more innovative, and looking at how can we reach those co-ops or those MFIs who are working like groupal system, like Benoit just explained, how they're doing in, when they were SOSFIME, what they're doing in Peru and Ecuador, how they really work in rural finance and they work through this groupal system. So it's more than only cash. It's only for savings. It's only for small investments. So what is World Food Programme working on that to improve that, giving now the new technology, internet, everything. So moving digital cash transfers quicker, but using it also more efficient in a way. So opening up the relationship between here and there. Thank you.
Thank you. Why don't you go ahead, Cheryl?
I'll
if you'd
take
like
the
to
part
respond?
two, because the part one
Yes,
is
in
not
fact,
yet.
part one, I believe Carl had to step out, so we'll just go with part two.
Yeah. So, I mean, absolutely 100% agree with you on everything that you've said. The urgency, I'm going to zoom in on that a little bit. The urgency is always a bit of a barrier, but the great thing about money is we're finding we can prepare people in advance. Yeah, there's a lot of disasters that are quite predictable. And if you equip people in advance with accounts that they know how to use and they're ready to receive money, you can send money to people before. So, for example, in Bangladesh, the monsoons, you know, as that season comes closer and closer, it's possible to map out which areas of there's going to be flooding in, and it's the flooding that is the big problem with the monsoons for people, because they lose their houses and their livestock and everything. And so making sure that everybody has a mobile money wallet and is geared up and ready to go in the flood prone areas, when the time comes, you can see, you know, a few days ahead exactly who's going to be hit, and you transfer money in advance. They have money then to be able to protect themselves and move away. And in fact, it reduced for the last monsoon season in Bangladesh, it reduced the cost of the humanitarian response by 50%. So enormous savings. But more important than that, it was people wound up being able to use their money wherever they needed to use their money. If they had moved someplace, they could use it for whatever they needed to use it for. And also they suffered less throughout the entire affair. So you're absolutely right. There are a lot of really good products on the market, and part of it is us figuring out how to use them properly, and part of that is when to use them and so forth. I also want to talk a little bit about our approach is sometimes, yes, we use the big remittance companies because we have to send money really quickly, and they have a good footprint. So Ukraine's a good example. We're largely using the large remittance companies for Ukraine, but in the majority of cases, we're working with local financial service providers directly. So more than 100, in fact, globally we're working with. And the point there is, we want the sector to grow and to see women as a real, as real customers. But because we're not going to be there, I mean, we go in, we help, and then we leave. Yeah, we want to make sure that we're leaving something behind that's sustainable. But also, more importantly, financial inclusion only really happens when the women themselves can choose what product. So whether it's a village savings and loans, whether it's the post office, often, whether it's mobile money or any other way to receive money, if women aren't comfortable with it and they haven't chosen it themselves, then they'll just cash out. They'll just cash the money out, and they won't really use that product. So this is a big challenge. It's a challenge for an organization like WFP. Really, really big, and our procurement process is pretty demanding, especially when you have to deal with large volumes of money. You're wanting to make sure that your due diligence is right, and that money's not going to get lost somewhere along the way. And so pretty demanding around what type of financial service provider we can actually work with. To make sure money doesn't disappear on us. But on the other hand, we're never going to achieve the extra impact of financial inclusion if we're not able to contract with many different financial service providers, especially the ones that are currently serving the populations. So it is a big challenge. It's the same challenge that governments have with their public procurement for their safety net programs. Choice is not easy to give, as it turns out. I know that didn't answer your whole question, but
thank you very much, Cheryl. Thank you for the questions in the audience. Thank you, Benoit. Thank you, Lidvine, for your participation. And I hope that this conversation will continue beyond the boundaries of this session. And hopefully this has given you a bit of an overview of what all of the dimensions and concerns are in food security and nutrition, and the connections and examples of roles that others can play. And if it feels a little bit overwhelming because there's so much of it, I hope that it also opens the floor for opportunity, and that you see, because it's so diverse and it's so multifaceted, that means there are many opportunities for people like us to play a role in some way, in a way that works for our institution, that speaks to our own organizational strengths, and also is a win for people on the ground who are microfinance clients. So I encourage you to attend the upcoming breakouts on this topic. There are some this afternoon and tomorrow that are really going to delve into more detail and go down to the field level to give some more examples. And I also would encourage you to attend tonight's event, which is going to be fantastic, and we'll get a sample of some of the work that's going on amongst the 3 finalists, including some documentary videos that will take you out to the field to see the excellent work that they're all doing. And also, please don't forget to pick up the publication that Sam mentioned at the beginning of the session. There are some around, I think, in the back of the room and in the tent. So thank you all very much for your attention. Have a great afternoon.